It's update time. It's update time. Woo! I know you guys were waiting for this with bated breath. I know. I can tell. Okay, in a couple minutes, I'll give you how I did on my investments during March for my retirement portfolio. Guys, can someone just make it stop? Can someone just make it stop? Can we get back to a regular, stable financial environment where our stock market is kind of continually going up, little drop, up, little drop, up, little drop? Yeah, I know, it's not realistic, right? But can we at least try? Can we at least try and get those 10% per year we're supposed to get in stock returns? Yeah, right. That's over decades that they... Looks like it's already time for my morning vodka. Funny how water just like looks and smells like vodka. Isn't that weird? Anyway, guys, let me get to my updates now. Even in this bad environment, hey, you got to stick to what you're doing, right? I'm sticking to what I'm doing. I'm sticking to my approximate 60% stocks, 40% bonds portfolio. I have not budged on that since I retired a little over a year and a half ago. I just haven't. If you feel confident in what you're doing, then do it. Stay to it. So here's where we were. When I retired, I hope the glare is okay on that. When we retired back in August of 2021, I was sitting on about $548,000 total between my two 401ks and what I had in cash. All right? Now you see below that, those are the numbers where I was in February of this year. I had 276 in one 401k, I had 118,000 in another, and I had 53,000 in cash for a grand total of 447,000. Hey, I was down 101,000 in a little over a year and a half. That's just not sustainable. It's just not sustainable. Over a year and a half, going down over $100,000 in your portfolio, it's not going to work, guys. I get it. Okay, I get it, especially with, the interest rates that the Feds have been doing lately. I get it with, the volatility we've been going through, the bank failures. But come on, we got to get back to normal soon, right? Going back to this, as you can see, in February, I was down 15% in one 401k. I was down 21% in another 401k from when I retired, all right? It's just not sustainable. Can't do it. Now, let me show you how I did last month, March. In one 401k, we had this amount. Are you excited? You excited to look at the side of my face while I write? I know, it's exciting. In another 401k, we had this amount, and our cash there, and our total was a whopping $449,000 total. That's where I stood at the end of March, okay? My 401k, it went up by 1,000. Ooh, surprising. My other one 401k, it went up by 1,000. I actually thought the numbers would be kind of worse than this. I really did. Because we had some bad days thrown in March, didn't we? I thought it'd be worse than that. So I have a grand total of 449,000. Hey, I'm only down 99,000 from when I retired. I feel much better now. Let me ask my hummingbird friend up there. Are you okay with that? No? Okay, yeah, me neither. So let me give you the percentages of where I am now in March to when I retired. One 401k is down this amount. Another 401k is down this amount. So, as you can see, didn't really budge too much from February, right? I'm pretty much just spinning my wheels at this point. One is down 14% from when I retired. The other one is down 21% from when I retired. Now, I know a lot of people are doing worse than that. I know, because my assets, my mix, as I said, is about 60 stocks, 40% bonds, okay? This cash you see here, the 53,000 there, I have that split up. A big majority of that is in T-bills and I-bonds. All right, so that cash just isn't just sitting in the bank. you know, of course, I've got money on hand if I need it and I need to access it like that. But a big majority of that is sitting in T-bills and I-bonds, okay? Now, what's helped me a lot, though, is, as you can see down below there, the income I've been bringing in from YouTube. In January, my first month of being monetized, and by being monetized, that means you had to have 1,000 subscribers and 4,000 watch hours. So I started the channel just after Thanksgiving, and it's actually pretty quick. I feel very lucky because a lot of people, it takes a lot longer to get monetized. In February, how come I only had $1,500? How come? Well, what happens is that in January, I had a couple videos that just blew up. You can't predict it. No matter how much you try and look and figure out the algorithm, sometimes it works. Sometimes the ideas you think going in on a video, you're like, oh, this is gonna kill. Crickets. You just don't know. So those two big money earners that I had that blew up in January, you know, the views went down in February. So because of that, my income, my YouTube income in February was only $1,500. Okay, let me show you what it was for March. Actually, this is the estimated income that I'll be making in March. YouTube gives you estimated numbers until a couple weeks into the new month, you get your finalized numbers. $1,400 I should be making in March for YouTube income. Now that income is through ads that YouTube places on my videos. And thank you so much to all the subscribers out there for giving me the views that you've given me so far. And we keep growing, guys. We keep growing. We're going to keep getting bigger. So, you know, that income has pretty much made what I wanted to happen when I knew I needed to get an online job or some kind of income coming in. What I wanted to do is I wanted to be able to at least just pay for my mortgage. That income you see there on a monthly basis, that's paying for my mortgage and a little bit more. So I'm happy with that. So, you know, I mean, this whole market and everything that we're doing, guys, if we can just stick to what, you know, we're confident in. Again, I'm a very conservative investor. I'm about 60-40. Right now, with the fluctuations in the market, it's more like 58. Jeez, high desert. I love it. It's beautiful, but it just kills my throat. Yeah, you're right. You can't smell it. Anyway, ooh, a little tangy. If we stick to what we know works, stick to it. We'll get through this. I don't plan on doing too much differently. What I've said in previous videos is that I might be switching that 60-40, which is in a target retirement date fund. Might be switching that to like another kind of fund that they have that just sticks to those percentages. It will not vary. Target retirement date funds, the older you get, the more conservative it gets. So I'm thinking about switching my money in those two 401ks to a fund that will just be 60-40 in perpetuity and stick to that. I feel comfortable with that. You know, I'm pretty conservative, not too risky, not really conservative, but if I can stick to 60-40 in my investments, I think I'll be good. All right, guys, so hang in there. You know, it's another month. Wasn't too bad in March, but all we got to do is just stick to what we're doing. And you know, at that time, you will have got this.